Airways franchise in Southern Africa and low-cost carrier Kulula.com earned 22 cents in the year to June versus 19.6 cents a year ago. Sales were unchanged at 3 billion rand, and the company said it anticipated boosting its market share in a stagnant market on the back of increased flights out of its Lanseria hub. Joining me in studio for more is Joint CEO Gidon Novick. Gidon, thanks very much for your time. Your share price is reacting well to your results, as I said, up 2% just a short while ago, and we've got about 14 minutes to the close on the JSE All Share. Let's focus on this operating margin, which is below 5%. You've said that that is too low. You are looking more at the likes of a 10% operating margin, which you believe is feasible. How are you going to achieve that?
Well, as you know, we've got a good top line, and now we've got to focus on the bottom line. There's a lot of efficiencies that we can still bring to bear. The main issues are fleet. The new fleet that we're bringing in, the 737-800s.
These are the new generation Boeings.
Yes, and it's a completely different aircraft. It consumes a lot less fuel, costs a lot less to maintain, much more reliable, so we get a much better on-time performance. So just overall, you know, the investment that we're making, which by the way is the first time in the company's 65-year history that we've bought new aircraft, is really going to make a huge difference to our efficiencies and our
You're looking at
operations.
3 of these new generation Boeings, is that correct?
By the end of the year, we're going to have 3 on lease, but then a further 8, which we're buying new from Boeing. Those will be coming in over the next 2 to 3 years.
Just looking at the Soccer World Cup, last night I was speaking to Kaushik Patel, the CFO of South African Airways, and the World Cup did not meet their expectations. I see a similar trend at the likes of Comair and Kulula.
Well, I was hoping to be able to retire after the World Cup, but unfortunately I'm going to have to continue working. It was good. It wasn't spectacular. It was very hard.
Was it just that we didn't get the numbers that we thought we were initially going to?
It was so difficult to predict. You know, the numbers were all over the place. We were fortunate in that we did a big deal with Match. Match, as you know, did the hospitality packages. We, you know, somehow were the only carrier to end up doing a deal, and that was good for us. You know, we always talked about the World Cup as being a long-term thing. You know, what was going to be the long-term impact? We haven't seen the post-World Cup impact. We haven't seen massive tourists coming in. But over the long term, you know, South Africa's on the map. We're on the map as a tourist destination. We're on the map as a business destination, and that's got to count for something in the future.
Your Lanseria strategy is working for you. Do you see that expanding, and is it big growth potential for the company going forward?
Yeah, it is. There's going to be a bit of a pause on our growth because the runway needs to be upgraded. It's got a limited capacity right now. It was never built for the kind of volumes that we're putting through it. So we're going to have to wait about a year to a year and a half until a new runway is constructed, and then we'll continue with the next phase of growth at Lanseria.
And if we're talking about growth, we've also got to touch on your African strategy, because that is a prime target. It appears that the global airlines, all they have their eyes on Africa routes, and certainly South African Airways is doing its best to consolidate its position on the continent.
Yeah, and they've had a head start over us. You know, it's been very protected for many years, and they've had a start. So we chomping at their heels, and we are growing into Africa. We've got Maputo and Dar es Salaam coming online. So slowly but surely the African strategy is starting to happen.
And you bring us to the competition side of things in the airline industry. What is it like out there at the moment? Are we starting to see a more even playing field, if I can use that terminology?
Yeah, there are very good signs in that respect. I mean, SAA showing a profit, government saying they're not putting any more money into SAA. You know, those are the right.
Are you seeing it on the ground, or is this just verbal assurances?
No, we are. I mean, I have to give credit to the current SAA management, the current SAA board. You know, the message is that it's going to be professionally run, it's going to be properly run, and that's good news for the industry.
Just before we go, the key challenge for you as we move into the new financial year, you've obviously got external variables beyond your control, but what you can control, what would that be in terms of a challenge?
Well, we've got to continue driving the efficiencies. We know that out of 3 billion or potentially 4 billion next year, we can extract a much better profit. It takes hard work, it takes focus, it takes the dedication of all of our people, and we're going to do it.